Hi everyone. So today we will be attempting accounting 9706 paper 1 variant 3 of the May-June 2023 paper. So this paper is a 1-hour paper. So let's get started with it. Firstly, what are the advantages of being in a partnership? So all partners have limited liability. This is not true, as limited liability applies only to a company. This is not true. Responsibility for running the business is shared. Yes, this is true, because each partners can complement each other. Right. Thirdly, shares can be sold. So this is not true, as this covers limited company. Lastly, the business has access to more sources of capital than a sole trader. Yes, this is true, because the capital in a partnership is larger than that of a sole trader. So finally, option 2 and 4 is true. So therefore, the answer is D. Which statement about the purpose of a trial balance is correct? It assists the subsequent preparation of financial statements. Yes, this is true, because the financial statements are prepared based on the trial balance figure, but of course, including balance day adjustment. It ensures that all double entry postings to the ledgers are accurate. No, this is not true. It ensures that all postings to books of prime entry are accurate. This is nothing to do with the trial balance. And it shows that all transactions in a period have been recorded. Not true, because a trial balance could balance even if we have omitted certain transactions. So this is not true. So the answer is A. Okay, next, the accounting equation of a business was as shown. So as you can see here, assets, liabilities, and capital figures are given. So the assets include a bank balance of 1,000. So what this means is the 1,000 is included in this 48,000. So you can imagine it to be like this. The total assets of 48,000 consists of the 1,000 plus the remainder of 47,000. So this 1,000 refers to this 1,000 here. So the following transactions occurred. The owner took drawings of $2,000 by check. Now take note here, this is a drawings, but the owner is withdrawing more than what is available. So which means the owner will remove all the 1,000 from here, and an additional 1,000 will be deemed as an overdraft. So that is going to increase your liabilities. Okay, and since this is drawings and the value is 2,000, and as we know, drawings decreases capital, so this would be minus 2,000. Okay, you would want to check and see whether the accounting equation balances. As you can see, 1,000 minus 2,000 equals minus 1,000 on the right hand side, and it's balanced by this minus 1,000 on the left hand side. Okay, so therefore this is the scenario. So the second transaction, goods for resale were purchased on credit. List price was 4,000 less 25% trade discount. So list price is the price before deducting trade discount. So if you were to purchase these goods, we would be purchasing at 75% of the list price, and that would be 3,000. Okay, so as a result, inventory is going to increase by 3,000. So your assets will increase by 3,000. And because we are purchasing on credit, the liabilities will increase by 3,000. So take care that each transaction is balanced via the accounting equation. So finally, your total assets would be 50,000 Total liabilities would be 11,000 and total assets 39,000. So therefore, the correct answer is C. Next, which item is revenue expenditure? Okay. The first option is a capital expenditure because of the word installation. The second option is also capital expenditure. So these are not the answers. Third option, number plates. When you buy a number plate on a new motor vehicle, that is capital expenditure as well. Okay, so the correct answer should be redecorating. So the word re tells you that you're doing it again. So you're kind of like maintaining, you're not adding value to the office premises, but rather spending on revenue expenditure. So therefore, the answer is D. Next, on 1st January, the owner of a business purchased a new machine. So all non-current assets are depreciated by 25% per annum. So during the year, the following payments were made in respect of the machine. Okay, this is what you see in the box, the cost of the machine itself, plus some related expenses. So a charge of 5,100 for these items was included in the draft statement of profit or loss for the year ended 31st December. So by how much was the draft profit for the year understated? Okay, so what we have to do here is we first need to determine the capital expenditure, which is not just the cost of machine, but some added charges as well. So let's go through them one by one. So cost of machine is a capital expenditure. Delivery is a capital expenditure. And so is installment. But the 1 year's insurance is not a capital expenditure. In fact, it's revenue expenditure. So why was it important to determine what was capital expenditure? Because the capital expenditure is the one that we need to depreciate by. So the correct depreciation should have been 25% of the total capital expenditure, which is 4,250. But the depreciation charged as given by the question was 5,100 here. So as you can see, the depreciation was recorded at a figure higher than what it was. So therefore, the depreciation was overstated by this two figures difference, 5,100 minus 4,250, which is 850. So depreciation being an expense was overstated. So therefore, profit was understated by 850. So therefore, D is the answer. What is the purpose of providing for depreciation? So as you know, depreciation is the cost of the assets spread over their useful life. And we record depreciation in contrast to matching it against the revenue that we have earned. So what I've just mentioned best describes the matching principle. So A is the correct answer. However, let's look at the other options. To calculate the true value of non-current assets. So this is not a correct answer. Depreciation, the net book value that we have calculated is not the true value. It is the value in accordance with the business, because the same asset owned by two different businesses may have different value due to different rates of depreciation being applied in accordance with the usage of that business. To ensure that money is available for repair of non-current assets, no, this is nothing to do with depreciation. To provide cash in the business for replacement of non-current assets. This is also nothing to do with depreciation, as depreciation is a non-cash item. So therefore, the correct answer is A. A business purchased a vehicle which had cost 27,000, had an estimated residual value of 1,000. A depreciation of 18,200 has been charged on this vehicle. The vehicle was sold in part exchange for a new vehicle which cost 29,500. A check for 19,000 was paid in settlement of the transaction. Okay, so we first need to know the breakdown of how we paid to purchase the new vehicle. So the cost of the new vehicle was 29,500. So we paid an amount of 19,000 to settle off. So which means we must have traded in value of old vehicle for 10,500. So this can be regarded as the so-called selling price of the old vehicle. Okay, so now we proceed to calculate the net book value of the old vehicle, which is the cost 27,000 coming from here minus the accumulated depreciation of 18,200, and that would be 8,800. So therefore, comparing the selling price, I mean the trade-in value of 10,500 against the net book value, that would give us a profit, as the trade-in value was higher than the net book value. So therefore, profit on sale of vehicle was 10,800 minus 8,800, and that would be equal to 1,700. So therefore, the correct answer is C. The totals of a trial balance did not agree, and the following errors were discovered. A check for 27,000 for the sale of non-current assets had been credited to the sales account, and the corresponding entry was correct. Okay, what this actually means is we sold a non-current asset and we credited to the sales account. We only credit sales account if you're selling inventory, whereas non-current asset is an asset. So we should not have credited sales account, but we did. The corresponding entry was correct. So what this means is we have correctly debited the bank account with the correct amount. So what is wrong here is the credit side, not the amount, but the name of the account. So it should have been non-current assets instead of sales. So this error, although it has happened, will not affect the trial balance. So this is not what we're looking for. We're looking for answers which affect the balancing of the trial balance. So the trial balance can still balance. So therefore, this option is not accepted. Number 2, the purchase on credit of a new motor vehicle for 27,000 had been omitted from the supplier's account. The corresponding entry was correct. Okay, so when we purchase a motor vehicle, the correct double entry would be to debit motor vehicle in which we did correctly, 27,000. But we should have credited supplier or other payables, but we did not do that. So there was nothing on the credit side. This would affect the balancing of the trial balance. So this option is in. Thirdly, entries in the cash book for a transfer from cash to bank of 27,000 had been reversed. Okay, so the correct double entry should have been bank. We need to debit bank 27,000 and credit cash. But what we did was, we did the opposite. We debited cash and credited bank. Now, although the account names are wrong, but since they are equal amounts, 27,000 on each of the debit and credit side, the trial balance can still balance. So by the way, this type of error is called error of complete reversal. So it will not affect the balancing of the trial balance. So therefore, this is not what we're looking for. And lastly, the purchases account had been overcast by 27,000. So now it was not clear here whether this was a credit purchase or a cash purchase, but that doesn't matter actually, because should it have been a cash purchase, we would have credited cash. Should it have been a credit purchase, we would have credited trade payable. Neither of which was mentioned in this question. So which means the credit side was correctly done. But so it should not be 27. The credit side was the correct amount. Well, let's call it X. We do not know what the amount is. But the purchases account on the debit side was whatever X amount plus 27,000. That's what it meant. It has been overcast. So which means the purchase account had been over debited. So which means this will affect the balancing of the trial balance. So hence 2 and 4 would be our answers. So therefore the correct answer is D. A suspense account had a balance of $450. So what caused this balance in the suspense account? Now, the suspense account having a debit of $450 means that the debit total in the trial balance was lesser than the credit total by $450. So we should be looking for answers which describes this. So let's look at option A. Motor expenses of 225 correctly entered in the cash book, posted to the motor vehicle as a credit. Okay. Now what this means is we have, since they use the word expense, so which means it is something that we are paying for, which we should be crediting in the cash book, and which is mentioned that we did correctly. That means we have correctly credited the cash book with the correct amount. But we have also credited motor expense with the correct amount, but it's on the wrong side. So you need to double this amount to move it back to the debit side. So therefore, A is the answer. But let's look at other options as well. Motor expenses of 225 entered in the cash book as a receipt and posted to the motor expenses as a credit. So this means that instead of debiting motor expenses and crediting cash, we did the opposite. We debited cash and credited motor expenses. Okay. So your trial balance can still balance as a result of this. So this is not what we're looking for. Next, motor expenses of 450 correctly entered in the cash book, posted to motor vehicle as a debit. So here we have correctly credited cash and we have correctly debited 450, but it went to the wrong account. It went to the asset account instead of the expense account. So C is an example of error of principal. So this is not what we're looking for. And lastly, motor expenses of 675 entered in the cash book as a credit of 225 and posted to motor expenses as a debit of 225. Now, here, the correct amount was 675, but we debited and credited a different amount, which was 225. So this is an error of original entry, which will not affect the balancing of the trial balance. So hence, therefore, the correct answer is A. What is the benefit of preparing a bank reconciliation? To identify differences between cash book and bank statement? Yes, this is a correct option. To know whether any bank overdraft limit had been reached. Now, this bank overdraft limit had been reached has nothing to do with preparing the bank reconciliation. To know whether the balance at the bank is a debit or a credit. To know this, you would have to work just your cash book to know whether your balance at the bank is a debit or credit. You don't necessarily have to do a bank reconciliation to know this. To use the bank statement balance in the statement of financial position. So, it's not the correct answer. So therefore, the answer is A. A bank statement shows a credit balance of 1,500. A payment of 500 and a receipt of 1,250 were included in the cash book, but have not yet appeared on the bank statement. The bank interest payable of 1,100 had been correctly recorded in the cash book, but due to a bank error had been recorded in the bank statement as 1,000. So what is the cash book balance? So to answer this question, we start off with the bank statement figure that we know, and that is 1,500. Now, since they mentioned that it's credit, so it's positive 1,500. Then we need to deduct this 500. So this 500 actually refers to unpresented checks. Okay, and then we need to add 1,250, which is none other than uncredited deposits. And finally, bank interest payable of 1,100 had been correctly recorded in the cash book, but due to a bank error, the bank statement recorded as 1,000. So this means that the bank only deducted 1,000 instead of 1,100. So which means the bank statement has understated the amount. So the bank statement needs to deduct a further 100. So this would be bank interest under deducted or understated. So therefore, the cash book balance is 2,150, and the correct answer is C. A business is preparing a sales ledger control account. Which statements are correct? Okay, all sales are debited to the sales ledger control account. Now, sales ledger control account is another name for trade receivable control. And trade receivables are created when credit sales happen. But here it mentioned all sales. So this is not correct, because all sales could mean we are including cash sales as well. Cash sales has got nothing to do with the sales ledger control account. Next, contra entries are credited to the sales ledger control account. Now, contra entries are always a deduction. So since you are mentioning sales ledger control account, which is a trade receivable account, which is an asset account, so to deduct means you would have to enter on the credit side. So this is true. Third, discounts allowed are credited to the sales ledger account. Yes, if you look at the format, discounts allowed reduces the amount that customers owe us. So this statement is correct. Finally, the allowance for irrecoverable debts is credited to the sales ledger control account. This is wrong because we only credit irrecoverable debts, should there have been any, not the allowance for irrecoverable debts. So therefore, the correct answer is D. So at the end of a financial period, the total of the individual balances in the purchase ledger was 149,000. The following errors were then discovered. A contra for 2,500 had been omitted from a supplier's account. Discount received of 1,200 had been credited to a supplier's account. No entries made for credit purchase from a supplier. Purchase return had been credited to a supplier's account. The question is, what was the correct total of the individual balances in the purchase ledger at the end of the period? So what the question is asking is, what is the corrected total? So which means among all these errors, we need to look for which of these affects the purchase ledger. So let's go to the options one by one. A contra for 2,500 had been omitted from a supplier's account. Now, since they mentioned a particular supplier's account, that means the purchase ledger is affected. Okay, so we start off with the purchase ledger original balance, which was 149,000. Now, a contra for 2,500 had been omitted from a supplier's account. So this was supposed to have been deducted, but it was not done so because of the word omitted. So we need to deduct 2,500. Okay, so this being the contra. Discount received of 1,200 had been credited to a supplier's account as 2,100. So again, a particular supplier's account is mentioned. So this will affect the purchase ledger control, the purchase ledger account. So discount is something that we should deduct or rather debit. But we have added because they use the word credit. So we have wrongly added 2,100 instead of correctly deducting 1,200. So the first thing to do is to cancel this. So since you have wrongly added, so we need to cancel the discount received of 2,100 by deducting it. Then we need to record the correct discount received of 1,200 and we should deduct. The next, no entries had been made for a credit purchase of 5,100 from a supplier. So when you purchase from a supplier, so a particular supplier, we should credit the supplier's account. So this was not done in the purchase ledger as well as the purchase ledger control. So how do I know that both are affected? Because no entries made. Okay. So, but we are looking for what affects the purchase ledger. So since purchase ledger is affected, so we need to add because we did not do so. Purchases. Purchase returns of 3,000 had been credited to a supplier's account. So again, the supplier's account is mentioned here. This will affect the purchase ledger. So purchase return is something that we should be deducting or debiting. So we wrongly added 3,000 instead of deducting 3,000. So the first thing to do is to cancel this addition. So cancel purchase return 3,000 and then we need to record purchase return 3,000. So upon adding all this, we would get a total of 142,300. So therefore, the correct answer is A. A statement of financial position at the end of the financial year showed the following information. So you have here in the box non-current assets, trade receivables, inventory, trade payables, and bank, which appears to be an overdraft because of the word credit. So capital at the start of the financial year was 19,100. Profit for the year was 9,200. Question: what were the owner's drawings for the year? So in order to answer this, we need to think about the equation regarding the equity of the business. So opening capital plus profits minus drawings equal ending capital. Now, the opening capital is already given as 19,100. So this will be the opening capital, 19,100. The profits is given as well, 9,200. Now, we need to work out the drawings. Now, as for the ending capital, we need to work this figure ourselves using what we see in this table. So the approach that we can take is to go by the accounting equation, which says that capital equals assets minus liability. So therefore, ending capital would be ending assets minus ending liability. So the assets that we see in this box are 18,000, 3,000, 1,800. Yeah, just these three. So adding these three, well, that will be 21, 22, 22, 800. Yeah. And the liabilities would be the trade payables and the bank. So this would total up to be 3,950. So therefore, the ending capital would be 18850. And we can easily work out the drawings to be 9,450. So therefore, the correct answer is D. In the absence of a partnership agreement, the Partnership Act 1890 might apply. So which statement is not correct about the provisions of the Partnership Act 1890? So in absence of a partnership agreement, only two things apply, and that would be profits or losses shared equally amongst the partners. And if there's any loan from the partner to the partnership, the loan interest would be charged at 5%. So these are the only two things which apply. So therefore, option A, drawings are not allowed, is not an option. I mean, it's not correct. So therefore, this is the answer we're looking for. But let's look at the others. Interest on capital is not allowed. It's correct. So remember, we are not looking for what is correct. We are looking for what is not correct. Profits and losses are to be shared equally. Yes, correct. Salaries are not allowed. Correct. So apart from what I mentioned here, there is no interest on capital, no salary, right? Whatsoever. No interest on drawings. So therefore, the correct option is E. Victor and Wasim are in partnership. At the start of the financial year, the balances on the partners' current accounts were given as Victor 22,500 credit, Wasim 3,700 debit. So the following information available for the financial year. So questions: what was the balance on Wasim's current account at the end of the financial year? So we only need to concentrate on Wasim. So therefore, we would need to open a current account for Wasim. So we would now put the information that we know, which is the opening balance being a debit balance, 3,700. So Wasim's drawings, 17,500. And then we have the interest on drawings to be 525. And we have the interest on capital, which should be placed on the credit side, 1,700. And we have the share of profit. Since it's a profit, the figure is entered on the credit side. So the credit totals would then be 99,200. So therefore, the balance would be 77,475. So this would be the answer to the question. Current account for Wasim. The balance at the end of the year is 77,475. Hence, the answer is B. Which item would not be included on the SOFP, statement of financial position, for a limited company? Which would not be included? So, issued share capital would be included. Proposed final dividend. Now, proposed final dividend is not a business transaction. This is because when dividends are proposed, they need to be agreed to be paid. And this decision needs to be taken upon in the annual general meeting. So unless it's not been agreed to be paid, it does not become a business transaction yet. Okay, so if it's not a business transaction, then it would not be shown in the statement of financial position at all. So this is not a business transaction. C, revaluation reserve appears in the statement of financial position, and so does share premium. So therefore, the correct answer is B. Okay, the equity section of the statement of financial position of a limited company on 1st January is shown. Okay. So you have information on the ordinary shares and the retained earnings. So on 28th February, the company made a rights issue of 1 new share for every 3 existing shares, held at a premium of $1.50. So here the premium itself is $1.50 per share. So which means the shares were issued at 2 plus 150. The shares were issued at $3.50. So the rights issue was fully subscribed. So question, how much cash was received from the rights issue? Okay, so we first need to calculate the number of shares before the rights issue took place. So we'll do that now. Number of shares brought down. So that would be the value 450,000 divide $2. So therefore, there are 225,000 shares. Now, the rights issue would be the number of shares multiply, as mentioned, 1 for 3. So multiply 1 over 3. So that would be 75,000 units issued out. Okay. So the cash that we're receiving is from the rights issue. It's from this 75,000 units. So therefore, the cash received would be the number of units issued multiply the total price per share, which consists of the nominal value plus the premium. And this would give us an answer of 262,500. Hence, the answer is C. Which stakeholders use the financial statements to assess whether a company is a reasonable credit risk? Okay, so this would apply to people who are looking at the risk, the credit worthiness of the company, and those people are none other. They can't be customers, right? Not employees, because it does not concern them. Not the government. Not the government. Finally, it is the suppliers. So what they're asking here is whether or not to grant credit. So suppliers will be most concerned about this. So therefore, the answer is D. Which statements describe the limitations of accounting information? So business in the same industry may use different accounting policies. That's true. One is accepted. Non-monetary aspects of a business are excluded from financial statements. Yes, true, because financial statements only measure monetary transactions as explained by the accounting concept, right? So, and then third option, results of accounting ratios are based on the use of historic costs. This is true. So number 2 follows the money measurement concept. So all 3 points are true. So therefore, the correct answer is A. Okay, a company provided the following information at the end of its first year of trading. So question is, what was the trade receivables turnover? So the formula to calculate this is trade receivables divide credit sales per day. So it's a standard to use 365 days to divide by, unless the question specifically mentioned that 1 year has 360 days. So when nothing is mentioned, we always divide by 365. So therefore, the trade receivable would be, as per given, 4,100. Now, the credit sales is also given, 27,000. And you need to divide by 365, as I mentioned. So this would give you an answer of 55.4 days. Now, it is always prudent to report your number of days. So therefore, we would always have to round up to the next number, which is 56 days. So therefore, the correct answer is C. A company's profit from operations during a year was 128,000. Interest payable was 8,000. So the following amounts were included in the company's statement of financial position at the year end. Okay. So what is the return on capital employed? So the formula for this is profit from operations over capital employed multiply 100%. So the profit from operation is already given by the question, 128,000. So we have to calculate the capital employed using the information given in the box. So to do this, you have to fall back to the accounting equation. But before that, capital employed simply means capital plus non-current liabilities. So how do we make use of the accounting equation to get this information? So first, we lay out the accounting equation, and then we need to break down assets and liabilities into its 2 components. Okay, So what we are looking for is capital plus non-current liability, which is this. So which means that the capital plus non-current liability finally is equal to net non-current assets plus current assets minus current liability. Okay, so this is the capital employed. So from the table, our non-current assets are 485,000. Okay, now we do not know the figures for current assets and current liabilities individually, but we know that current assets minus current liability is also known as net current assets. So that would be 27,000. So therefore, the capital employed would be 485,000 plus 27,000, which is 512,000. That is what our denominator is going to be here. And therefore, the answer comes round to 25%. So therefore, the correct answer is D. Which business functions would benefit from just-in-time management of inventory? Okay, so number one would not be an option because it's on the office side. It's got nothing to do with the handling of inventory. Number two, yes. Number three, yes. And number four does not have anything to do with just-in-time inventory. So just-in-time inventory is all about how we managed our inventory during the production and during the distribution phase. So therefore, the correct answer is D. A business pays its employees on a time rate basis of $8 per hour. It also pays a weekly bonus of $1.20 for every unit of production over 100 units, plus an additional 80 cents per unit for all production over 120 units. So employees are guaranteed a minimum weekly wage of $335. An employee worked for 37.5 hours last week and produced 129 units. Question: what was the employee's wages for that week? So here we need to calculate the components of the wages, starting off with basic wage. So the basic wage would be the number of hours worked, which was 37.5, multiplied by the rate per hour, $8. And this would be $300. Okay. Then we also have the weekly bonus. Now it says here in the question that a weekly bonus is paid for every unit over 100 units. So how do we know that the employee earns a weekly bonus? Because the employee produced 129 units, which is clearly more than 100. So we are more by 29 units. So the calculation here would be the units produced minus 100 times $1 and 20 cents. And this would give us 34.8. Okay. And lastly, we have the additional payment. Yeah. Additional payment. So this additional payment applies for any production above 120 units. So since it produced 129 units, so it will be 129 units minus 120 units and multiply 80 cents per unit. And this would give us an answer of $7.20. So summing all this up would give us an answer of $342. So therefore, the correct answer is B. Which type of business is most likely to use a job costing system? So the job costing system is a system where each unit produced is custom made or personalized, unique, right? So that best describes an aircraft manufacturer, okay? Because a paint manufacturer, the paint is to be used by the public, right? So this, the types of paint produced is, they're the same, they're not custom made. This is not an option. Pet food manufacturer is not an option because they're going to sell out the same packet of pet food to everyone, and so is stationery. So options B and C and D are not options because the product is the same product that is used by the public, whereas aircraft manufacturer is more, the aircrafts are more personalized. So therefore A is the best answer. So therefore A is the answer. Which statement describes a cost center rather than a cost unit? Option number 1, a location where only variable costs are incurred. This is not true. A measurable part of a product or service. It's not true. A part of a product or service for which costs are calculated. Not true. Any location where costs are incurred. So this is the best option. So therefore the correct answer is D. A business marks up all of its product by 20% on total cost to calculate a selling price. So each unit of product uses 4 hours of direct labor and 2 kilograms of direct material. So the correct overhead absorption rate to be used is $8 per direct labor hour. In error, the bookkeeper used a rate of $13 per direct labor hour. Question, what was the effect of this error on the selling price of 1 unit of the product? So from here we know that the cost of the product is overstated. So cost overstated by, it's overstated because of the overhead calculation. So the wrong overhead rate per hour used minus the correct rate per hour which should have been used times the number of hours required per unit, which is 20. So therefore, the selling price is also overstated by 20 times 120%. Now, why 120%? Because the markup is 20%. So which means the selling price has been overstated by, the new selling price would be 24. The wrong selling price calculated. So therefore the correct answer is D. The following budgeted information is available for a business. The question, what is the budgeted break-even point in sales revenue? So we first write out our equation, sales minus variable cost minus fixed cost equal profit. So sales minus, now the variable cost is given here as 52,000. Fixed cost is given as 120,000. And the profit is given as 88,000. So therefore, from here, the sales is equal to 260,000. Right. So question is, what's the budgeted break-even point in sales revenue? So now we need to work out the contribution. And that simply means the sales minus the variable costs, which gives us 208,000. So from here, we need to work out the CS ratio, which is the contribution over the sales. And this is equal to 0.8. So finally, if you want to work out break-even point in sales revenue, we can use the formula, which is fixed costs over the CS ratio, both of which we know what the figure is. So fixed cost was 120,000. The CS ratio was 0.8. So therefore, the answer is 150,000. So therefore, the correct answer is B. A business provided the following information about its total cost. So you see here direct material, direct labor cost, factory expenses, which is a variable cost, fixed factory overheads, variable selling and distribution expenses, fixed selling and distribution expenses. So further information, 1,000 units had been manufactured and sold for $200 each. So this is the selling price per unit. So question, what is the contribution per unit? So as we know, contribution per unit would be selling price per unit minus all variable costs per unit. So let's work the calculation here. So the contribution per unit would be the selling price, which is given as 200 minus, now we're going to deduct all variable costs, regardless of whether they are production or non-production costs. So we'll start off with direct material, direct labor. So the calculation would be 84,200 divide 1,000. That would be 84.2. Okay. Next would be factory expenses. Which would be 15,700 over 1,000. So that would be 15.7. Next would be variable selling and distribution expense. So that would be 18,100 over 1,000. So that's going to be 18.1. So therefore, the correct contribution per unit would be 82. Now, a quick way of doing this is to, since we know the selling price as 200, so to get the variable cost per unit, we simply add all the variable costs, which I'm putting up in boxes. So that will be 84,200 plus 15,700 plus 18,100, and altogether divide by 1,000. So that would give us 118, which would sum round to the same answer. So therefore, the correct answer is B. And finally, which items are included in the marginal cost of a unit of production? So the marginal cost would include all variable production costs only. Variable production costs. So since option A contains an item of fixed, so A would not be an option. B is also out because there's mention of fixed costs. C, yes. Okay. D, why isn't D an option? Because between C and D, C is a better option because D says that we should only include direct material and direct labor only. So there could have been other variable production costs which should be included. The word only tells us that we should not include variable production costs, which is wrong. So therefore, the correct answer is C. That's all for this paper. Thank you very much. See you around in the next couple of videos where I'll be discussing other papers.